Hello, everybody. It's Saturday afternoon, August 21st. My name is Ben Maldonado. I am here with Barrie Hederachi, and it is time for the Plus3 commodity and futures forecast show. How you doing, Barrie?
Doing very well. Thank you.
I'm super excited because this past week we had signs that we are breaking out of the funk in many markets, and it has been a funk for a while, and it seems to be changing.
Yes, I agree.
And we can take a look at Bitcoin, which is an example of the funk and the move out of the funk. Since May, as people that have been following on along with us have seen, Bitcoin was chopping around in this congestion zone and just frustrating bulls and bears. Once we broke above this half square, we became bullish. Once we broke above the full square, we became fully bullish and said, hey, this thing's heading higher. And as odds favored, we're moving higher. We're heading north towards the half square. The half square is in the 50,600, 50,700 range.
And that's really the key area to watch here.
No question. How price acts at that square. Do we get stuck under it? Do we congest around it and then head back down, or can we get up, sit on top of this, and then head up to the full square up here? In the 59, 60,000 range. But right now it's full steam ahead. Looks really bullish.
Mm-hmm.
Anything else to add on Bitcoin?
Well, and quite the steep trend line there, if you want to draw one in.
Yeah, it's pretty steep. Doesn't look very sustainable, but with this thing, anything's possible.
So it looks like it did a 1-2 in the funk, and then this could be a 3. Sure, it looks like a 3. So,
Mm-hmm.
1-2 meaning the June low being the 1, right?
Sure.
I mean, the June low is starting off the leg. Yeah.
Yeah. Here, and then here's 3.
Yeah, there we go. Mm-hmm.
Yeah. It looks good. It looks bullish. I think the Bitcoiners will be happy for a little while, provided we stay above this full square.
I think that the trend line is going to be key for the next break.
Mm-hmm.
Coming off the July low, going on up, because Bitcoin doesn't consolidate that much, so it's either go or no go.
True. There's your trend line.
Pretty good.
Make it white so you can see it better.
Mm-hmm.
There's your angle.
There you go. Quite the angle to carry. So let's see.
Yeah, let's flip it over to you. Run through the big 5, and then we'll hit some of the commodities and talk about the state of most of the commodities. There's the S&P.
There it is, still flying high.
And a beautiful hit on your timing there, Barrie. Very nice work.
Timing line came in well. Also on the weekly, we ought to probably take a look at that first.
Yeah, let's go to the weekly.
Mention it.
Things they are changing.
Things are changing. Things are. So, let's see. We've been talking about the weekly. Well, we've been checking the weekly every time we have a show. So, and the highlight for the last couple of 3 weeks, maybe the last 4 weeks, basically last 4 bars was our, price approaching the 72-week mark and also hitting the 144. So, and I've been saying that's important. We ought to watch it. This is a sort of an inflection point, and we're still going to do that. Because we don't have a whole lot to cover today, and some of the other markets, not a lot to cover either. So I just wanted to take a minute to show you guys why I like the 72 cycle. So if you look at this is the 07 high and the bear market there, and you can see that ran pretty much 72 weeks down. You see that, Ben?
Perfect. Yep.
Right there, right?
Right into the 09 low.
Pardon me?
right into the 2009 low.
That's right. And there are lots of examples like that. And that's why when one of these comes up, you really want to pay attention and be heads up. All right. So we're still kind of in the same area. We were talking about this 43, 48, 43.50 being important last week. And of course, the low came in very close to that on a weekly basis. So let's go back to the daily, and I'll wrap up the E-mini. Looking at the daily big picture, last few times we were looking, all these numbers have been the same since last week. We were looking for support around 43.40 on the daily because that's 270 degrees up from the low. To really get a break and sort of another leg down, I'd really like to see, not I'd really like to see, but it would really have to break 270 and the price would have to get stuck below 43.40 at least per the square. And the break last week came down to test that level, and we of course we rallied off of it. But now this is a key point. That's why I want to spend a couple of extra minutes. We have these 72-week cycle expiring. We have other timing cycles up at the high or in this neighborhood, and price breaks to hold support and rally. So what I'm looking at this week is, look, we have a one-day pullback so far from the drop. And if we turn here, well, I think market could see weakness in a hurry, especially if we take out Friday's low. Okay, so I would watch for that being the first signal of weakness. And clearly taking out 43.50, 43.40 would be the next sort of the red light. That said, I think we ought to look at the upside. The other side of the coin is, we did hold support. So let's take a look at that. I would say as long as we're above this 44, 45 or so, let me change this number here. The market is in pretty fair shape. Okay, so we need to get above 43, 45. I have 44.37 from last week, so I'll take that out. And that's exactly where Friday's high came up and stalled. So that's a price to watch for next week or next few days to see if we can clear that or not. Isn't that right, Ben? We talked about
another piece of evidence, Barry, to throw in there that we were talking about on Friday is at that high on a lower time frame, we did a perfect ABC up.
And what was that, 30-minute or hourly? Or
that was the hourly, yeah. And so if we do stall out here, and that was simply a corrective ABC up, there's another fast leg down coming. And,
well, you know what? We had one in the lower time frame in here, but we also have, look at this.
Yep, there it is. There's another right there. Yep.
So, but that coincides with the bigger square, and we always talk about how ABCD is always, not always, often put in good highs and lows. So
and good tradable highs.
Something to watch, eh?
Yeah, I mean, you and I are not sitting here making a call that that's it. The bull market highs in. We're going to crash from here. It's just that is a lot of evidence at this high this week that we made a high. Now, how significant that high is, time will tell. We have to watch price action, but we've made a high.
We're just showing the evidence that we have to consider. To watch and be a little bit cautious here, not be all out bullish. That's all.
That's right.
Right. Anyway, those are the levels. So 44, 45 is really the key level to get above and hold above in order to make new highs. Well, clearly we have to get above that for new highs anyway.
Right.
But that's the level sort of make or break. And if we reverse without being able to hold above it, even on an hourly basis, then I think it's either going to consolidate through here between basically sort of 100 point spread, and lower end being 43.40, 43.50. If we get under that, probably going to go much lower. Else, we're going to consolidate for the week, and the upside breakout is 44.45.
Right. Okay. And we were talking about if we do turn down from here, even if we just do a simple ABC, that takes us to 4,300. And if it's a fast type move on a break, we could be looking at 4,100. Those are the numbers that I had.
If we take out the 43.50.
Yeah. If we do reverse and don't go much higher from here.
Well, if we take out 43.50, I think those are reasonable targets. But I also think it could last a lot more than a couple of days. So
true.
That's the other thing. All right, moving on to bonds. If you guys have been following, we've been bullish bonds since we broke out of this 59 area up here. Actually, right around the test here and the break. And now we talked about this 166 10 area being resistance. We've been trying to bang against that. This is the third try and stalled up here. So I'm guessing we're probably gonna, if we don't break out, we're basically stalled in this box. And
Shopville right now.
Well, it's gonna be, we're range bound already, right? More or less. So that's gonna be the range for a while. Unless we break out of 66, then I think we have legs to get up to 170, test that area, which is the upper range of the square. All right, take a quick look at the weekly bonds. Again, daily we saw that resistance, and on the weekly, this happens to be a quarter square, same area. So I think either we're going to have, unless we break out, we're just going to consolidate a little bit longer, probably next couple, it could be another 3 weeks for all I know. But what I do know is we're not trending and we're not really looking to trade it. We're watching for breakouts and how the structure sets up. And
we got to break out of that range to really get some movement.
Exactly. And now you guys know what the two levels are. So, well, the lower boundary of that range would be around 162. So that's a lower. Let me mark that up also.
Barry, in talking about the ranges, we got to make sure that everybody knows about the spreadsheet and checks the spreadsheet that we've put up. It's a Google Doc shared. We'll post some links so you can see it again. Everything's been updated in there. The levels are updated. You should go check it out to see the levels for the different markets.
Right. Okay. So that's it for bonds. Let's go on to gold. Nope, let's go on to crude. This has been interesting. We did have the high come in, and at the time we were looking for at least to go and test 79. But in order for it to test 79, we had a couple of levels we had to watch, and price couldn't quite hold those levels. And let me put the square here. So that was the first key, not being able to take out this high, and that's the 1/8 line of the 72 square, the dotted red line here. We failed there, came back down, and we did have this square drawn out, rectangle drawn out as a support zone, which was sort of the consolidation we had early in the year. Really couldn't hold it, tried a couple times, sold off. Now we're at the bottom end of the range and nearing support. I think really the support is around 60. And I'm expecting crude to at least test that area before this is all said and done. There we go. And it's right around the half square, and it makes sense. And looking at this little triangle here, everything kind of lines up to that. Now, if we take out 60, then it's clearly we're going to high 50s, or at least to test 50, 47.50. I really can't imagine how that's going to happen, but key levels to watch this week, at least for us, will be between 59 and 60 for support. But we're getting close to support here now.
Yeah, I'm with you on crude. I think we are in a support zone. Crude's going to be one of the things I talk about, but it's a good sort of proxy for the rest of the commodity markets. It's closer to the end of its corrective phase than a lot of them because it's pulled back sharply and it's into support. And so how it does may be a nice preview for the rest of the whole commodity complex.
Right. And if you look at the ABC down, look at that. It's exactly
perfect.
Made the ABC perfectly, right? So we could have a low in place. If not, we're very close. Not that ABCs always catch it, right? But it's definitely close. And on the weekly, if you look at the quarter square, it's right around 60. So that's why I think 60 is a solid number to watch. And if we can hold that, you could probably mount another rally to go test the highs.
Yeah.
Now, the key thing here is not 60 holding. Key thing is if 60 fails. So watch both sides of the street there.
No question about it. This is a market that you need to be watching closely if you're interested in trading it because the setup's coming soon.
Right. It's a fun market, but you got to watch it close. No question.
Especially at a time like now.
Mm-hmm. And let me just... So that's really the support area we're looking at. Next, on to gold. We talked about gold being on a firm footing, all coming off the low and above the half square, and trying to. Well, last week we talked about how 1789 should be the test on this leg up. So we basically banged against 1789 and stalled out for a few days. But if you notice, Ben, we didn't sell off much. Not a whole lot of selling came in, or if it did, there were buyers there to take care of it. And it looks bullish to me. I wouldn't. So the next target up would be on 1832, 1832.
Mm-hmm.
And on any pullback, the major support is, of course, the half square, which is around 1743, 1742. Okay.
Yeah, you and I were talking during the week.
Mm-hmm.
During the week that it looked like gold was much stronger than silver this week, and when all the commodities were selling off, I forget what day it was, gold was flat to up. There's somebody that's with deep pockets has been buying gold this past week or so for some reason. I don't know if they're for looking to get in front of an event or they just want exposure, but somebody wanted to own gold this week.
And, to be fair, it's holding right at resistance. So we have to watch this if you're trading the short term. And if we can manage to sort of take out, let's say, Thursday's high, I'm expecting 1832 to be the next level to test, which were the old, these two highs back in July.
Yeah, on the spreadsheet that we highlighted, that 1830, 1835 level is key. Break out above that, and gold's going to really run.
Right, definitely had room to run.
Mm-hmm.
And on to the dollar. Did we take a look at the gold weekly? Well, here's the weekly. Again, we have on the weekly, we have this big, huge
triangle,
sort of triangle building up. It's a fourth wave-ish looking thing. And so there could be a lot of churning going on in the big picture. So again, that's why short-term trading could pay off well, but you really have to keep an eye on the numbers here.
Right.
And we're kind of smack in the middle of it. So you got to be a little bit.
I like that view though, because it shows that, yes, we are consolidating. We've been consolidating for a year, but if you look to the left, the trend is bullish.
Exactly.
Higher highs and higher lows. So there should be one more, odds favor another push higher in here on a bigger picture.
Yeah, bigger picture. It's firmly placed. It's fine.
Yeah.
Onto the dollar. Well, if you've been watching, we've been bullish the dollar since June, I think since June. And the level we were watching was 92.55 to see if we can hold above it. We held above it on the little correction there. And now the target was around 93, 94, well, 93, 98, around 94, which is a half square.
Mm-hmm.
And I would think that the leg might be over here. I mean, we're close enough to the target. So we got to be really cautious here on the dollar, because the dollar also did an ABC up. So we're kind of we're hitting some resistance, what I'm saying. And it's possible that we did a false break above the March high. You see that, Ben? Right
Yeah, good eye.
Mm-hmm.
You know,
so
it's
possible, like it's a caution, right? It's a yellow light, but
yeah,
it's possible we're kind of close, kind of could have done a false break. So we got to watch that.
You know, it's interesting, Barry, from a macro perspective too, when you look at the dollar and you say, hey, we're close and running into resistance and maybe done. It fits perfectly with what I'm seeing in most of these commodity markets, that they have been correcting, they are correcting, and they're close to being done.
Right. Exactly.
So that inverse relationship between commodities and the dollar is playing out in price action in the respective charts right now.
Yes. So let me take a quick look at the weekly. Again, we were looking at this weekly target up here around 94.
Yeah, there's your
and
resistance.
We're close. We could get there, but just all we're talking about is look, we're closer to our key level, and to keep your eyes open.
Interestingly enough, too, you're right near a timing marker too, within a couple of weeks.
Exactly.
So,
mm-hmm. And while we're here, might as well take a look at the euro.
Yep.
So, last few months we've been expecting the euro to be weak, and it's been down every week. We had a support level on this center line on the fork. And the last, couple of months back, we were expecting the market to come and test that, which we did. And we also broke a little lower on this 1/8 line. The key now is it's possible that we did complete that leg. And just like the dollar on the inverse, we do have a potential false break off to this April.
That April low. Yep.
Yep, the April low. And so again, we're kind of getting close because we're between the dollar and the euro. We're within range, let's just say. That said, I think the key level to watch would be around 1524, 1525. That's a half square. And if it gets there, I would say, we're looking for really good support here is possible. But the way the break came in, it's possible that's a false break also. So we got to watch it. Again, the entire leg down, we were okay, but now we're at that level. We got to be a little careful. We got to watch it.
You know what, Barry? It's that double bottom there looks too tempting for the boys not to run down and take out all those stops.
You mean down here?
Yeah.
Could be, yeah. It looks very weak. So
but it would be just like them to come down, sweep break those two lows, exactly. Sweep the stops, tick the half square and then turn it.
Exactly. So you got to watch it, but we're within range here now.
Mm-hmm.
And switching back to the daily euro. We had some lines drawn in here last week, and this quarter line, we were looking for support at the quarter line, and it's possible that we got it because the reversal that we had on Friday. Again, it's something to watch. You can see how the 50% line held price for a week, and we sold off. Now we're at the quarter line. So it's really a matter of are we going to consolidate above it, or are we going to run back up, counter trend a couple of days before we retest the line. And key thing here this week is, look, we did hit a critical level, and that's important to note.
Sure.
Yeah. Well, that's it for me. I'll
swing it on over. Yeah.
All right. NASDAQ. A lot of
Yes,
action last week.
the NQs. So the wonderful thing about this chart is this line here at the 15,150 area
Mm-hmm.
is super significant. You can see the price action around it for
Well, about a month.
a month. Over a month, we've been banging up against it, pushing up, not closing above, pushing up, pushing up. We sold off finally, and then a big rally on Friday. So the next move, the next daily bar is going to tell us a lot, right? Can we finally get above and push through and motor on up to new highs, or does it turn back down again and fail? If it turns back down again and fail, it could be a fast move.
Well, the thing is, we had 4 days down, and then this is the first counter trend. Eh? So we got to really watch this to see if if this push can't get above that line, then there's definitely further weakness.
Then it's the half square and the 14.5, 14.4 area that's calling, I think. So we'll watch this, but this is not bull market action here. We have to see if it can get above and sit on top. They're going to run some more, but right now it's very suspect. We broke the uptrend line from the May lows, back tested it a couple times. So the odds favor that we're going to fail, but let's watch price, because price tells us what's actually happening, not what we think is going to happen. So that's the NQs. Before we switch over to the commodities, I want to sort of give you a brief overview of what's happening. Most of the commodity markets that we follow, and there's roughly 14, 15 of them, are either in correction, near the end of a correction, in the beginning of a correction. They're all in different phases, while in the bigger picture on their weeklies and monthlies, they're very bullish. And one of the tenets that Barrie and I trade with is you want to trade in the direction that the higher time frames are supporting. It's sort of the path of least resistance. Yes, you can counter trend trade, you can go against it and make money. It's just a tougher slog, right? When you have the higher time frames backing you, it moves with ease when everything lines up on the actual time frame that you're trading. So with that being said, what we're going to do is we're going to look at the grains, because they're very near the end of their correction, in my opinion. We're going to look at crude oil, because it's very near the end of its correction. And then we're going to look at cotton, because cotton just finished a nice up move and is more towards the beginning of its correction. So we can sort of give you a view of different markets that are in different spots and how you can potentially engage with them in a profitable manner. So let's start off with beans. So here's soybeans. All the charts we're seeing will be daily, and I may throw in a monthly once in a while, but I'll call it out. So this is soybeans. We made a high in early May, have been correcting since. The last few weeks, we've been talking about being in this, this bounce section where we were still going up, but looking for one more sort of clean out move coming. This week, it looks like they've started the clean out move, right? We took out those lows from late June. On Friday, we took them out. And so now what we're doing is we're watching this market to see, is it going to continue down and touch the full square here and find support there? Or are we going to get back above this half square here and start working out a path to moving higher? Again, knowing that the higher time frames are backing you, saying it's bullish, and things are still bullish. So one of the things we drew in was this dotted trend line, the shorter term trend line, to know that, hey, if we can get above that and sit on top of and break that and have price stay on top of it, that means the immediate downtrend has stopped. And then we're looking at seeing, can we get on top and sit on top of the half square? Can we get on top and sit on top of the full square? And the numbers are in the spreadsheet for everyone to see. But this is an example of one of the commodity markets that has gone through a multi-month correction, and we're near the end of it. Doesn't mean it's done going down yet. We don't have enough evidence yet, but we do know that we're in the late innings of this correction. So now we're going to start looking for evidence that the lows are in. It's starting to make higher highs and higher lows. There's some accumulation coming in. And then once we get that kind of signal, knowing that we've got the backing of the higher time frames, the monthly and the weekly, that's when we want to get involved, because that you get the powerful moves off of those.
Also, Ben, speaking of corrections, 3-month corrections, commodities are common. So that's also coming into play here.
Yeah, and then especially in the grains, I'm glad you brought that up, Barrie. There's some monthly timing that we have that fits in the September timeframe for the end of the corrections. And this week, the week of the 22nd, we're in that window. So we've got the price pattern and the chart pattern telling us one thing, the price actions telling us one thing, the timing cycles are telling us a similar story. So this is how, in the bigger picture, we try and line things up to say, okay, where do I want to get exposure to a market when it gives us the signals that we're looking for? So beans is setting up perfectly, as are some of the other grains. Let's take a look at corn, which is in a similar spot as beans. So here's corn. And you can see similar pattern, a little bit different, made its high in May, late April, early May. We've been correcting since. It hasn't done sort of its clean out move yet. You can see it's still in this sort of choppy consolidation pattern, but under, making lower highs, making higher lows, triangulating like it does near the end of a correction. So corn is again on the watch list. It's not as far along as beans because it hasn't taken out that initial, late June, early July low. But corn is, again, another market with very good long-term technicals. The cycles coming into September are supportive of a change. We've been correcting for 3 months, 4 months now. So corn is on the radar, looking for, is it going to come down and do a false break? Are we going to make a higher low and reverse? Breaking these trend lines would obviously give us more confidence that the tide is turning and we can start getting involved in a bullish way with this market, which is supported bullishly by the monthly and the weekly. Any comments you have on corn, Barrie?
Not very good. You covered it.
Yeah. So similar pattern, and we're looking for similar results there as well. The one that's the strongest of the group, and you can see from the structure and the price chart pattern here, is wheat. Corn and soybeans are near their lows of the corrections. Wheat has actually made a high, even though it turned out to be a false break high, you could call it, has made a higher high from the late April, early May highs that it made. It's still pulling back, because it moves with the group. But this is the strongest market of the grains. And if you can only get involved in one market in the grains, once we get the signals and once we get into that, late August, early September cycle time, wheat really looks to be in a strong position that when it turns, this should be the leader of the grains in terms of performance on the upside. You can see we made the high, we pulled back, came up, tested the full square here, couldn't get above it. Now we're pulling back again. So anywhere in this like 708, 709 area, it's possible we get support. It's possible if they're washing out all the grains, it could get as low as, 670, 667 area. I've got the numbers up on the spreadsheet for you to look at. But wheat, as you can see, is the strongest of the grains, and one that I think is properly positioned to perform very well when the grains turn, in the next month or so.
And if the half square could hold, it'll be especially strong.
Yeah, it'd be really good structure because it's staying on top of this high here, previous high. So wheat looks the best of the grains. All the grains, I think, are looking good, and we're coming into the timing where these corrections and these sort of choppy conditions should end, and we should start seeing some bullish action in the grains again. Let's go to the next market, which Barrie touched on, but I want to go into a little bit as well to show you the things that I'm looking at on crude. Crude oil, we're very bullish on, as Barrie covered. But let's look at a couple things from the daily here. From the high in late June, early July, we've done a perfect ABCD down, commencing on Friday. We are right above the full square on the daily here, which is in this 6150 area. Didn't quite get to it. And I wouldn't be surprised if we, pierce it and get down to the eighth square that Barrie was talking about, around 60, just to wash things out completely. I just think crude is in a position where the correction looks to be ending, and the possibility of turning up, if we can hold support here, hold these squares, and continuing to move up bullishly is present. This is one of the charts where I did want to go to the monthly as well. Do you have anything to add on the daily, Barrie?
No, I think we gave ample time for crude and covered it well.
Yes, but let's take a quick look at the monthly, because I want to show you where the monthly is. Yeah. The monthly's in an interesting spot. The low on Friday is right on the full square on our monthly. We rallied up to the half, pierced it a little bit, couldn't hold it. Now we're coming back and testing the full square. Holding this full square on a monthly basis, which is in this 6150 to 60 and a half range, if we can hold this full square, it's very bullish from a longer term standpoint. Because you can see it's basically holding in the area of the highs from all of 2019 and early 2020. So this monthly chart, once we pierce the downtrend line, now sitting on top of the square, if we do it, I think it's big picture. It's sets up crude for much higher prices going forward. Last one I wanted to cover was cotton. So let's look at cotton. Cotton was a really good performer here the last 3-4 weeks. You can see once we broke out of this triangle, back tested it, made a nice move higher. The reason I'm showing cotton here is this is an example of another commodity that's kind of hits its cycle high and has just begun its correction and its pullback. It's bullish. We made a new high. It's turning out to be a false break high at this point. So we want to watch this and see how we progress in the correction. Again, the bigger picture, the monthly, the weekly, very bullish on cotton. But short term, on a daily basis, we've made a high. We had a nice square at the high here. On a geometry standpoint, from this low, is basically 60 in price and 60 in time. So that, and we saw a reaction off of it. So it tells us that it was something significant. There's probably at least one more push lower coming in this. I was looking at the weekly, and supports in about the 93.25 area. If we get down there, a quarter off that high is in the 90.70 area, which would be down here.
Yeah, that's a key level there in cotton.
Yep. So if we can sit on top of there, we're covering here, we're covering here. So I wouldn't be surprised to see us pull back to this level at least. Again, with the idea that the bigger picture, very bullish, shorter term. We made a peak this week, and we have to see what kind of correction. Do we get a simple ABC down? Do we get a more complex, choppy sideways move? It just takes time and watching the price and see what price tells us about what this wants to do. In the bigger picture, knowing that things are very bullish. So in summary on the commodities, most of them are continuing to correct and continuing to consolidate. We highlighted a few today, the grains and crude, which are, if not at the end of their corrections, very close. So it's really important to watch the levels and watch them to see if they start setting up, showing us that the selling is stopped and the buying and accumulation has begun, and we can get involved on the long side there. Cotton here we covered just to show what some of the others, like coffee, which recently made a high, sugar, which made a high, cocoa, which made a high, nat gas, they're starting to pull back and correcting. The metals, gold, silver, copper, are closer to the end of their corrections, but they got some more work to do. So the message is, if you're looking at it from a big picture macro standpoint, like I started the show off with, is I'm excited because we're nearing the end of something and the start of something new. It means different things for different markets. In the stock market, in the ES, as Barrie, expertly showed, we could be near the end of something there, and the end of the bullish run, not the high, but a high, and it could be some sort of consolidation or correction. The commodity side of things, it's the opposite. We've been correcting, we've been consolidating, we've been chopping. It could be time to turn bullish. So pay attention, buckle your seatbelts, because I don't think it's going to be boring the next few weeks and in the fall. What's your parting thought, Barrie?
Well, that's very well said. Well, stay alert, watch your levels. Everything is at, like you said, at the end or beginning of another move. So I think this is the time to be trading with the eyes wide open.
Amen to that. Have a great week, everybody, and we will talk to you on Twitter during the week and post the spreadsheet links for you to get the various levels on the different markets. All right. Take care, Barrie.
Thanks, Ben. Have a good week.
All right. See you soon.